My name is Jack Greenberg. I will be your host today for the Small Cap Insights podcast powered by Darrow Associates. Thank you all for joining us. We are a leading full service investor relations firm focused primarily on small cap and micro cap equities. Joining us on today's episode is Chris Abbott, CIO and founder of 1035 Capital Partners, and evidently quite the hockey player. Chris, welcome to the show. Great to have you.
A lifetime ago. Thank you for inviting me, Jack. I appreciate the invite and the access to your audience.
Yes, sir. So first question, let's start with some background on yourself. What led you kind of starting 1035 Capital?
Well, as you noted, I played ice hockey, so I got a good ice hockey scholarship, came down to St. Louis, where I am now. And then I worked for a company called Argent Capital Management, worked there for about 10 years, got into the small cap space, started doing my CFA. I'm kind of a serial entrepreneur. I've started a few companies prior to that. And I just always thought I'd like to run my own shop. So I've got that kind of, let's say, independent streak. So I decided I was going to do that in 2019 and started it in December 31st, 2019, right into COVID. So maybe the timing wasn't the greatest you've ever had. But that being said, it was a very volatile market, which was interesting and put a lot of opportunities on the table. So that's how I got into it. That's how I started it.
That's great. So I'd like to touch on your investment philosophy, but before that, what drew you to the small cap space initially first?
Oh, well, I'm kind of obsessed, a fanatic of trying to find the next big company. I just find it very interesting to go look for these little opportunities. What are they doing that's different? And I really like small caps specifically because, A, there's not that many people looking, so there's more opportunity to add value. But also, these companies tend to only do one or two or maybe three things. So if you can catch that one thing that's moving, it's a major impact for them versus, if you're in GE and they've got 50 different industries, it doesn't really matter too much if one industry is moving or not.
Got it. Yeah, that makes sense. So I won't try to summarize your investment philosophy, but a couple
Oh, yeah.
questions.
Investment philosophy. Yeah, I'll give you that as well. Sorry, I forgot. So really it comes down to everything we look for has to have a catalyst to change either sales, margins, or asset efficiency. Um, I'm a kind of a disciple of what's called Holt's C4 model, and those are the key functions there. Um, and then I like to split my portfolio into kind of two groups of companies, what I call eclectic value and what I call disruptive growth at a reasonable price because I'm too cheap to pay for disruptive growth otherwise. Um, so the collective value isn't really, it's not something like price to books. Usually I'm looking for turnaround stories, a new product, something that's misunderstood. Uh, and there's really big opportunity to go from basically dead to something big. And then disruptive growth at a reasonable prices, what you would expect disruptive growth before it gets too expensive. So I tend to be a little bit early on that front. That's how you get it cheaper.
Yeah. And so are there any kind of specific industries that you like to focus on, or it just depends where you find those catalysts?
Um, I started out as a healthcare analyst, but I don't really do as much there, although, there's plenty of catalysts. So if I find the right company, I'll get involved. But uh, healthcare is where I started, and I actually wrote my master's thesis on how to invest in biotechs around their FDA announcements. So it's kind of my original passion. But really, I find most of my ideas technology, industrials, materials,
Mhm.
and then like a little bit of consumer discretionary.
Yeah. And so your website mentions kind of uncovering these positive catalysts before they're evident to kind of other investors. How do you distinguish between a true catalyst that kind of unlocks that long-term value versus kind of just a short blip in the stock price?
Well, it really drives back to the sales margins and turns, and that's where this is what I think I do different than a lot of other people. A, I'm pretty patient, and B, I'm willing to really understand your business model. What's the management team trying to do? I often become very close with management teams, and they know me by name, they have my phone number, and we're talking fairly regularly, let's say. So, really my differentiator, excuse me, is I'm looking at where are you going in 12, 18, 36 months? And those are the catalysts I'm looking for. How are you changing your business? It's not necessarily, our next quarter is going to be good. I don't really care about that. Obviously, I want good quarters, but it's not the catalyst I'm looking for. I'm looking for catalysts that fundamentally change your sales, your margins, your turns, said differently, your business over the mid to long term.
Hmm. And so with that strategy, that kind of depends on being early to the story or to the catalyst. Uh, what does your turnover rate look like? Is it relatively low or?
I'd call it medium. I usually turn her over about half my portfolio a year, maybe 60%. And thinking about on a name, it would be about 60% of my portfolio turns over a year. Uh, but it tends to be kind of the way I do it is I'll enter a smaller position that I've got less conviction on. And if it doesn't work, I'm out kind of thing. That's where my turnover tends to be. Whereas my bigger positions, I've built that conviction, I've built that relationship, I understand what's going on in the business, and I often hold those for 2, 3, 5 years.
Okay, got
So the
it.
turnover tends to be towards the small end.
Yeah, that makes sense. And are there any kind of glaringly obvious things that indicate to you it's time to exit a position or?
The hardest part. No one rings a bell when it's time to sell, right? So I actually spent a lot of my previous life at Argent Capital working on how to sell.
Mhm.
Uh, and I've developed a kind of my own proprietary methods of how to sell, and I just try my best to follow those. The other thing I'm always trying to adjust for is what's the valuation versus the potential or what's in the company still. So that's kind of a moving target and it's hard for everyone to do, but at some point, you know, you're giving a lot of credit for something that may or may not happen, especially in small and micro land. And when I start to get to that feeling, I'm usually a trim,
Yeah.
not necessarily a sell all, because you never know how far things can run in micro cap.
No, I like that. I like that philosophy.
Mhm.
So kind of last two questions here.
Sure.
Look kind of in the future, 5 to 10 years. Are there any areas or industries you think the market is kind of undervaluing right now? I know AI is obviously kind of the hotbed answer that I get, but would like to kind of hear your perspective on it.
Well, that's interesting because I wouldn't say AI is being undervalued. It's definitely got a lot of attention.
Yeah.
Uh, AI is not an area I would consider it undervalued broadly. Now, that being said, I'm sure there's individual companies. I've got one in mind that I like that is relatively cheap in AI. I would not consider that to be undervalued in 5 years, maybe in 20 years.
Yeah.
But I think we're given a lot of credit. It's exactly what I just said. We're giving a lot of credit for what may or may not happen 5 years from now.
Yeah.
And in that world, I get uncomfortable. I go, we're giving them too much credit. Who knows what's going to happen? I guess I've been around microcap for too long to know that it doesn't always work. It doesn't always work out the way we want it to. Now, in this case, a lot of AI is being run by the megas, so maybe that's different. Um, One that I would have said like 6 months ago is nuclear energy. And that's actually where I've spent a lot of my time was in nuclear energy. But that too has become quite mainstream. And now I'm in the same kind of like, oh, I don't know if this is the right spot to be. Um, but following from that idea, and if you believe that AI is going to take over the world, um, clearly oil and gas has got to be a place you're looking at now because oil and gas plumbing the depths of, long-term lows into an energy supermarket. If you in fact believe AI is going to grow the way it is, then all energy sources are required, including oil, coal, gas, whatever else you can find, nuclear. Um, that's to me, I think, probably the most misunderstood part of the market. And the problem is everyone's loves the never-ending growth, right? That you get out of tech and that sort of opportunity, whereas oil and gas, coal is never going to be that.
Right.
But at the right time, it becomes an interesting trade, and I think it's very out of favor. And out of favor might be the wrong term because Trump's definitely a drill, drill, drill guy, but that's putting pressure on oil. So I think you can have a play there in the next few years, and really just energy broadly. Although some of the nuclear stuff I think is getting a little too bubbly for my tastes at this point. The other place where I think there's a lot of opportunity in the next 5 years is you're seeing a lot of like I'd call them technological advancements coming out of small companies that for the last 5 years have been left for dead.
Yeah.
And now all of a sudden that small cap market is starting to wake up a little bit. And there's some really interesting nichey little players um, that have something really unique. One I'll mention I do own, so full disclosure is Comstock. They're learning how to, or they're starting up a solar recycling business.
Hmm.
None of the big players are doing that, but it's a big enough market for small companies. And there's a lot of these different kind of technologies that have matured over the last 5 years that are ready to break into the mainstream, uh, that are still pretty cheap because people don't understand what's going on there.
I think that's a great answer. Yeah. Um, I think that oil and gas is constantly kind of undervalued. But last kind of hard-hitting question here. There seems to be kind of a persistent valuation gap between small cap equities and large caps. Um, from your perspective, what drives that disconnect? Is it perception of more risk or something else?
Yeah, I think perception of more risk, a more volatile world as well. I think we're just in a more volatile world now than we were 20 years ago. But I also do think there's a fundamental change in the market that people don't seem to care as much about valuation of mega caps that they once did. There's just less of a care like that. Oh, it's 30 times. Okay, that's fine. It'll grow forever. Ultimately, that'll be a problem, but it won't be a problem until it is. It's one of those things that it'll be great. It's the story of the turkey, right? For 364 days, the farmer's his best friend,
Hmm.
and then eventually, not so much. And the same thing will happen with large cap uh, growth at some point. The question is, what's going to be the catalyst? And it makes it especially difficult when you have fortress balance sheet to see what that catalyst would be. What's interesting is looking at how much these players are spending on capex for data centers is depleting a lot of their fortress balance sheets. Not saying they're now, triple B companies about to go bankrupt, but it's not quite what it once was. And then if you have some sort of volatile event, you don't have that cash to fall back on. So from my perspective, I worry about the large cap market. I actually was in a group with a bunch of CFAs the other day, and literally every one of them told me that you can't not be overweight large cap tech or you'll get left behind. And that to me is a scary proposition to hear everyone say that they're in the same boat.
Yeah, that's awesome. Chris, this is really great. Really appreciate you taking the time to be on the Small Cap Insights podcast. If you
Mhm.
guys are interested in learning a little bit more about Chris and 1035 Capital, please check out his website, 1035capital.com. And if you enjoyed today's conversation, please visit darrowir.com for more information. We'll see you all in the next episode, and thanks again, Chris. Appreciate it.
Thank you, Jack. Appreciate it.